what is this course? What exactly is this course? This course is for beginner traders, people who have zero idea what trading is all about, and they're interested in trading. They want to learn about the financial markets in general, not just the forex market, and they want to basically trade and make money from the forex markets. Okay, so this beginner course takes you from absolute beginner, all right, to a point where you are, above beginner and or intermediate. I'm not going to say advanced, even if the course is so detailed that it could take you to advanced level in less than 2 months, depending on how consistently you watch the course and try to practice and apply the things that are being taught in the course. But I can definitely say the course is going to take you from absolute beginner to above beginner level and or intermediate level. Okay, again, it's going to depend on how much you put in the work. All right, so this course is going to teach you everything from what is the forex market, how does the forex market operate, what tools do we use in analyzing the forex market, trading the forex market, managing our trades while trading the forex market. Okay, so there's a little bit of everything in there. All right, psychology, technical analysis, risk management, understanding what is risk, and also understanding how to portion your trades in terms of risk, talking about trade management. Okay, so there's a lot of things in this course that I feel like is going to be beneficial to a lot of people if only you take out the time to not just purchase the course but watch the course religiously. All right, what up, man? Profit Gang, you already know what it is, guys. I feel so excited whenever I'm about to do any of these videos because is a testament to the work that we're doing, putting out these videos, educating people, calling trades live, and seeing those trades play out right in the market. We all can see how the trades are playing out right in the market. So, it's very, very exciting to do a before and after video. And I just want to give you guys a follow-up video from the video that I did last week. And I really hope you guys gain a lot from this video. I'll be using Euro USD as a case study. I want you guys to, on your own, try to figure out, using the same concepts on GBP USD, exactly how the trades came to pass. Now, if we can reference some videos from last week, let's go straight into my YouTube channel. And one thing I'm going to say is, please, if you're not subscribed to the channel, use this opportunity to subscribe to the channel. The channel is slowly growing. We're currently at 583 subscribers, and I'm trying to put out more videos just so you guys can gain a lot more value from the channel, right? So if you're not subscribed to the channel, do that right now. And yeah, this is the video from last week, currently at 149 views. I feel like more people should go back and watch these videos because there's just so many gems that were left in these videos. Okay, so Euro USD trade breakdown. I think if you watch this particular video, maybe you have to go into the playlist, go to the trade breakdown playlist and watch the last video right here. Okay, the last video, the only liquidity video you need to watch. I've been talking about this video because a lot of the things that I've talked about in this particular video actually happened to the T in the market. So you need to go back and watch this particular video for you to understand the context of which I'm going to be explaining this particular video that I'm doing right now on Euro USD. Okay, so let's go back to the charts. Again, you can see how GBP USD already came back all the way down, sweeping this double bottom at the lows here, which I tagged as my take profit levels. If you watch the video, you understand why I had my take profit levels down there. So let's go to Euro USD. I feel like this is going to make a very good example with what I want to explain. Okay, so I'm going to remove some of all of this. Yeah, so this is where I'm going to start my analysis. Now, first of all, I want to give you guys the concept of reversal. For me, I believe every single trade is definitely a reversal. Now, what do I mean when I say every single trade is a reversal? If the market is going to buy, the market is going to have to sell before it buys. If the market is going to sell, the market is going to have to buy before it sells. Now, we know the nature of a bullish market is something that looks clearly like this. Okay, the market is breaking structure to the upside, is giving us new higher highs and new higher lows, right? This is the concept of a bullish market. If for any reason we have a break or structure to the downside in a bullish market, we know this to be a change of character, okay? So the character of the bullish market has basically changed, and then we can now observe the market to see what's going to happen next. It's very possible for the market to continue back to the upside. It's 100% possible for the market to continue back to the upside. However, if for any reason, okay, if for any reason the market attempts to go back to the upside and fails and gives us a confirmatory break of structure to the downside, then it's almost safe to say that we are now bearish in the market. So with this in mind, what we are going to be doing is we are going to be expecting the market to pull back to a certain level where we can now expect to sell from. Okay? We can now expect the market to pull back to a certain level and expect the market to sell from that level. So this is our expectation of the market. So as at the time when I called the trade, the market was right down all the way here. So it's not surprising that the market came all the way back when a lot of people will be thinking the market is buying because of the internal bullish structure that they're reading around here. Okay, still trying to buy this. Then the market changes character again and the market sells. So that's basically the setup of the trade. Again, we are simply expecting the market to pull back. That means we're expecting a temporal bullish phase, and we want this bullishness right here to again reverse, just like this one reversed. So we can then take a sell around here. And how we're going to be doing that is we're going to be expecting, once again, the internal structure of the market. Okay, to get to a certain level and reverse, so we can have a sell to the downside. So this is the concept behind the trade. Notice how I never said anything about liquidity. I never said anything about certain concepts that are very popularly thrown out there. All I'm doing here is reading market structure and using market structure to determine what the market is going to do. Now let's fall into the market. Let's see exactly what happened in the market. Now, mind you, I'm looking at this from more so a wider perspective. So whilst I'm looking at this from a wider perspective, I can see very old resistance levels that, of course, the market pierced into. Okay, so looking at this from a very, very wide perspective on the daily time frame, these resistance levels were formed all the way back in September of 2021. I don't really want to go into detailed top-down analysis because I already did this in the previous video, but just to give you context on the trade, we definitely got into a resistance level. After the market hit that resistance level, the market reversed. I have a wide range of audience, so I need to speak in a way that everybody's going to understand me. In Nigeria, I'm going to say reversed. In other parts of the world, you probably say reversed. But like, the market was bullish from here, got into the said resistance level, and let's see the structure of the market. Let's see the structure of the market. If the market actually changed its character, okay? So coming from here, we can see highs, lows, lows, highs. The market is basically ranging around this area here. You can see how the market is ranging around these areas here. Okay. Finally have a push out of the range. The market is retesting internal structure within the range. Okay. Internal structure within the range. around this area here. So we're having now a high. Notice how the market now changed character, giving us this. This is lower than this. Okay. So that was the point of change of character. All right. Now, just like I explained earlier, after the change of character around here, it's very possible for the market to continue to the upside. Okay. But notice how the market was already following a certain type of order flow. Coming all the way from here, we had a low. I want to do this in a better way. I don't want to rush this. So coming from here, we had a high. We had a low around here. We had a high. We had an internal break of structure. And, this particular break of structure around here is not just breaking structure internally. Okay. It's not just breaking structure internally around here. It's also taking out the external around here. So this is our daily change of character externally. And this is a break of structure internally, even before the change of character occurred. That's NBOS, that's internal break of structure before the daily change of character. Notice how the market is reacting off of this resistance level. Okay, so now money is being transferred from here to here because the market is now respecting this resistance level. So the market basically reversed once again from here, now back down bullish. You know what? Oh, that's the curve tool. Good. I really like to explain with facts. So in everything that I do, I really like to explain with facts. Okay. So what am I trying to do here? I'm trying to show you guys where the market reversed from here. Okay. After taking out that low right there as a change of character. Okay. You can see after the market changed character, just like I explained, the market tried to go back to the upside. But again, it was stopped around this area here. So the market once again reversed. And turned back bullish, sorry, bearish around that area there. Okay, after respecting this area of resistance. Now we had a secondary break of structure to the downside, which is basically a confirmatory break of structure to the downside, just like I explained earlier in my illustration. And we now have a new area of resistance. So when I gave out the trade, the market was around this area here. So basically we expected the market to pull back up into these areas and sell. Okay, and of course the market did exactly that. Let's now go to the lower time frames and see exactly how the market did that and how the trade basically delivered. Now, mind you, we already had our resistance level marked out on the daily time frame where we're expecting the market to get to, which is this area here. So we want to refine this area, to the lower time frame to get a smaller area of risk and a larger area of reward. Now, on the daily time frame, we can see daily internal market structure. The range we're looking at is from this high to this low here. But internally, we can see internal market structure on the daily time frame. We have a low, we have a high, we have a break of structure to the downside. I'm going to take this all the way right down there. Let's change the color to black. Okay, we know what's external, we know what's internal. This is external market structure, this is internal market structure, both coming from the daily time frame. Our expectation is for the market to come into this area here and sell. Now, the reason why you see this 0.5 here is because I've put a Fibonacci, okay, and I've customized the Fibonacci in a way that the Fibonacci is only going to show us the midpoint, which is the point of equilibrium. Now, mind you, when we're trying to sell in a downtrend, we are not going to sell until the market pushes into premium price. And premium price, in the Fibonacci is above the equilibrium level. Okay, so first of all, the first confluence that we have, having the confidence that the market is going to come into this area here and sell is the fact that this level is above the equilibrium level. We definitely want the market to push into premium price so we can sell. When we're talking about buying, we want the market to push into discount price so we can buy. But in selling, we call it premium. Now, the premium is above the 0.5 level. We can see that our resistance level or our order block or our supply level is above the equilibrium level. So that's our first confluence, right? That's our first confluence. It's above the equilibrium level. The second confluence is if we are trying to layer confluences, and again, we now add the regular Fibonacci, okay? So I'm going to change this to the regular Fib. So you want to look at the golden ratio of the Fibonacci. In this case, we can see the golden ratio is from the 0.62 level here to the 0.79 level right there. You can see how the market came exactly into the golden ratio of the Fibonacci. Now, this is for Fibonacci traders, regardless of the fact that I didn't trade the Fibonacci on this particular entry. Fibonacci traders, your trade would look something like this. And you can see how beautifully the trade played out without hitting your stop loss, of course, in this particular example. There are a lot of times where the Fibonacci can be manipulated too as well. This is for a beautiful 1 to 2.9 risk to reward trade. Amazing day trade for a Fibonacci trader. Okay, so this is another confluence. We can see how the golden ratio of the Fibonacci is lining up with our resistance level. Okay, but again, since we're trying to reduce the area of risk and increase the area of reward, the best way to do that is to use market structure to refine your daily levels. You can see how we have used the Fibonacci to refine the daily level. The first Fibonacci I used the midpoint. And if you're selling from anything above the midpoint, that means your area of risk is going to be very, very wide, because you can't really determine where your entry is going to be and where your stop loss is going to be. For this particular example, once again, we use the golden ratio. This is now giving us a smaller area of risk, talking about the 0.62 to the 0.79. But we can use market structure to further reduce the area of risk by doing multi-time frame analysis. So we have external market structure coming from the daily time frame. We have internal market structure coming from the daily time frame. What this means basically is, instead of using this range from this high to this low, I can now take my range from this high, because I have a break of structure here, to this low. Okay, so basically I'm shaving off some areas. I can now take my structure from this high to that low. Okay, so when I go to the lower time frames, like now the 4-hour time frame, I know exactly where to look at. Mind you, I already have my area of interest coming from the daily time frame. Now on the 4-hour time frame, we can see 4-hour internal market structure. Okay, this is the same structure coming from the daily time frame, daily internal structure. Low, high, 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 Okay, and that's the low right there. Please try not to get lost. Try not to get lost. Just follow the structure. Follow the structure and try not to get lost. All right. So looking at the structure, we can see this is our daily level. So of course, we want the market to somehow come into the daily level. Now, looking at the 4-hour structure, this is a low here. This low creates a high. We have a break of that low. The market pushes back into this area here. We have a break of structure to the downside around this area here. Notice how the market never came back to this order block here to mitigate that order block. Okay, the market basically created a low. It failed to mitigate, again creating some type of liquidity, and it continued to the downside. Okay, the market basically continued to the downside all the way around here. Push back here and here, and then the market started pulling back. Mind you, above equilibrium, okay, and of course, golden ratio of the Fibonacci, we have unmitigated demand levels here, which the market definitely ran all the way up to. Now, looking at the structure again on the 4-hour time frame, this is the last low that created the last high. And after the market reacted off of our daily resistance and 4-hour resistance at the same time, sweeping liquidity to the upside, the market once again changed character, gave us a low, a high, and a massive push to the downside. Now, mind you, I already know that this leg from this high should come all the way down and create a new low. Now I'm seeing the internal structure of the leg that's meant to do that, giving me something that looks like a low, high, low. We have a break of structure on the internal, and then we have a resistance level around here. So I'm simply expecting the market to once again come to this resistance level and sell, which is around this area here. So I'm expecting the market to come to this resistance level and sell, because I know that the final target for this is this lows around here. I really hope you guys understand this, man. You have to maybe go back, slow it down, pause the video just to understand this. Just to understand this. Now, I've already done all of these markups on lower time frames. So I'm just going to go to the lower time frames and show you guys the markup and try to explain the markups. Okay. So mind you, where we are currently in the markets, this is where the trade played out right here. Okay. This is where the trade played out. But of course, we're expecting the market to push back into the daily order block. This is the daily order block, the gray box. This is a 4-hour order block. This is a 4-hour order block. Very possible for the market to hit any one of them and sell to the downside as the final target. But before the market is going to get to the final target, it's going to have to move in a way that looks like this so it can get to the final target. Okay, so we know what the pattern should look like already beforehand. So we know exactly when to join the ride. Okay, looking at this once again on the 4-hour time frame, the red lines here are 4-hour internal market structure. Look how, again, the market changed character. This is happening everywhere in the market to prove to you that market structure is fractal in nature. Okay, sometimes you're seeing the change of character in a very wide way, and sometimes it's more enclosed. Okay, so this is that's a change of character right there. After the change of character here, okay, you can see how this level is a resistance level based on the fact that this is an internal break of structure before the change of character, exactly how we had this. Notice how fractal the nature of market structure is. Notice how fractal. So what we are having here is a bigger version of what we had here. Look at this very closely. Look at this very closely. So we had sell, buy, then we had a change of character. But before we had that change of character, we had internal break of structure before the change of character. The market came back to where the internal break of structure originated from and sold from there. Look at this once again. Internal break of structure and change of character. Where did the market come back to? The point of origin of the internal break of structure. And then we had that sell off. I think that's the best explanation I can ever give for everything that I've been explaining. Again, you can rewind this video and get to understand that what I just did there. Okay, rewind the video and get to understand what I just did there. Now, our main leg of price we're looking at is this leg here, from this high to this low. Okay, that's our main range. So let's go to the 1 hour time frame and see exactly what happened there. All right, so now you can see what's going on there. Guys, price action is so beautiful. Once again, look at this, like it's all rinse and repeat, guys. It's all rinse and repeat. Once again, allow me to make this a little bit more aesthetically pleasing. You know, what I'm trying to do here is show you guys exactly what I see, how I see it. Because trust me, I don't have any reason to mark up the charts in this much detail. You can see how messy the charts are looking, but I'm trying to show you guys exactly how I interpret the market. Okay? I'm basically trying to show you guys how I view the market, what I see in the market. When people talk about, you know, I've hacked the matrix, they don't see the market in the same way you see the market. I see the market in terms of structure. Okay, you're probably seeing the market in terms of candlesticks, buyers and sellers, whatever the case may be, but I see the market in terms of structure. That's why I'm able to follow the market structure and tell you exactly what's going to happen next based on the strong belief I have in market structure. Not in Fibonacci, not in liquidity, but in market structure. All right, so again, let's just look at this very, very, you know, little area of price action where we had a downtrend reversing back to an uptrend, and we have an uptrend reversing back to a downtrend after hitting an area of interest. Now, if you look at the nature of price action coming into that area, right, you would notice how we have once again an uptrend. This is a high, this is a low, this is a high. Then we had a change of character. This is a change of character. So once again, you can see that we have internal breaks of structure before the change of character right here. So unfortunately for me, I hit stop loss on this trade. I'm not even going to lie to you guys. I'm not going to come here and claim that I caught the trade flawlessly. I actually hit stop loss on this trade because using the concepts that I use, the nature of my entry was this. Okay, so this was exactly my entry. So I had my stop loss just above that high right there. So my stop loss was kind of around this area here. I was kind of generous with my stop loss, to be honest with you guys. So that was my trade. And the reason I placed my stop loss right there was because I could see some type of order flow coming from this high. We had this low, we have this high. So we are mitigating this order block right here. Then the money transfer, you know, all the way down there. So it was my understanding that the market had no reason to come all the way up here before the sell-off. So if this trade would have played out in my favor, which it was very, very quick to hit the, you know, take profits, even the full take profits for that matter, that would have well been a 1:8 risk to reward trade. Okay? That's a 1:8 risk to reward trade. And that's exactly how to catch your trades using market structure. I really don't like to say I'm using smart money concept, because when I say I'm using smart money concept, I almost need to include the idea of liquidity, fair value gaps, imbalances, time of the day and things of that nature. I'm just going off structure basically. What do I believe structure should do? Again, the concept is very simple. Okay, the concept is very simple. If we already have an established downtrend, we expect the market after a break of structure to pull back to a certain level and sell. But for the market to do that, it needs to use internal market structure. Okay. And when the internal market structure approaches the desired level, we wait for the internal market structure to change character better when it gives us a confirmatory break of structure to the downside. And this is our trade to the final take profit around here. And that's exactly what's happened here, guys. There's no better way to explain this. There's no better way to explain this. So what I wanted to do was to explain all of this on Euro USD, and I want you guys to take it upon yourself to go to GBP USD. I already have marked out the daily levels. I'm only going to show you guys the daily levels. So I want you guys to take it upon yourself to go to GBP USD and try and figure out, okay, using the exact same concepts that I just used on Euro USD, try and figure out exactly what happened on GBP USD, guys. Okay, look at GBP USD on the daily time frame. Look at GBP USD on the daily time frame. I don't want to make this video too long, in as much as I also call GBP USD on the trade. In fact, let's go back to the YouTube channel. So you can see me marking out the level right there. Okay, so this is probabilities and possibilities. So you see where I drew that to? That was very intentional. I drew it all the way down to the take profit. Now look at GBP USD, current price action. Okay, that's that same level right there. And this is exactly what I did, projecting that we're going to sell all the way to the downside. So knowing this, let's just simply go to the 1 hour time frame so you can see the internal market structure and you can see exactly where the structure changed. Come on, guys, you can see this, right? This is market structure alone. It has nothing to do with smart money concepts. Okay, this has entirely nothing to do with smart money concept. This is market structure. So I'm going to urge you guys to go back and backtest this. And again, if you gain value from this particular video, please subscribe to the channel, like the video, share with your friends. And of course, I have a Telegram group as well, or a Telegram channel where I update my community from time to time. This is my Telegram channel. So if you're seeing this for the first time, all you have to do is go on Telegram and type in GPS free signals, or you can pause the video right now and scan the QR code to get into the Telegram channel. And I'm going to be giving you guys back to back, trade calls coming from the higher time frame, massive swing trade calls, because again, a lot of my trades are higher time frame, outlooks. Okay. A lot of my trades are higher time frame outlooks. You can see students, testimony about what my mentorship has been with them and things of that nature within the Telegram. I post a lot of signals within the Telegram as well. This is gold, using the exact same concepts I'm teaching on my YouTube channel. And I post my trade results as well. You can see this is GBP USD exactly, selling from, look at that, guys. So I actually got the trade on GBP USD. You can see the results right there. Okay, you can see the results on GBP USD right there. Okay, right there. That was from the 1 hour time frame. I think I got a lot of trades on GBP USD. I also got trades on Euro USD. Okay. Also got trades on Euro USD. You can see some sales that I was able to catch on Euro USD. Some sales I was able to catch on Euro USD. USD JPY, using the exact same concepts as well. So guys, like I said, if you're new to the channel, also you want to join the Telegram community, pause the video, scan the QR code. And like I said, I'm going to give you guys the responsibility of going back on your own to backtest GBP USD, just to make sure that you understand exactly all that I've taught in this particular video, and you can on your own try to apply these concepts and backtest these concepts basically. So in order not to make the video very long, I'm going to end the video right here, and I hope you guys gain value from this video. I'm going to see you guys in another one, man. It's gang gang from me.